The said amount was forfeited by Mr. A since C would not fulfill the term the agreement. Finally, the house was sold by Mr. A to Mr. Sanjay on 2nd of January 2013 for a consideration of 12 lakhs. Compute capital gains chargeable to tax in the hands of Mr. A for assessment year 13-14, cost of inflation or as under. See now, problem number 6, you have just read out. Say I would like you people to take up the case stage by stage. All of you please understand firstly that the capital gains topic in which in whose name the assessment is taken up. In this case, Mr. Rakesh purchased the property by 4th April 1979. I will just show you that. Rakesh purchased a house property by 14th April 79 for ₹1,05,000. He entered into an agreement with Mr. B for the sale by 15th of September 1982 and received an advance. However, B did not remit the balance. Rakesh forfeited the advance. What do you mean by forfeiting the advance? Not returning the back. Not returning. Please understand that it is not returning. Forfeiture means retain the money. So, please understand that Mr. Rakesh kept the money of ₹25,000 and B did not discharge his obligation. That means, in a way, Mr. Rakesh received some portion of the asset and at the same time he had not transferred the property also. This is what had happened. Later on, Mr. Rakesh gifted the property to Mr. A by 15th June 1986. Now, for whom we are taking up this matter for discussion? Is it for Mr. Rakesh or for Mr. A? Look into the question. For Mr. A. That is what I told you. It is like a story. Rakesh was the original owner. He constructed it for ₹1,05,000 and he proposed to effect a sale in the year 82-83. And Mr. B, who approached him and paid him ₹25,000 and who could not complete the agreement, and that ₹25,000 was retained by Mr. Rakesh. That particular matter was over. Now, I am not discussing more about Mr. Rakesh retaining that money because we are not studying for Mr. Rakesh. Now we have to study from the viewpoint of Mr. A. Later on, he gifted the house property to his friend Mr. A on 15th of June 1986. Whether it will be considered as a transfer, that is, it will not be considered as a transfer at all. And Mr. A had not paid any money to Mr. Rakesh. Therefore, when Mr. A is effecting a sale now, what is the cost that we will be assuming? For that, you have to refer to section 49. 47 and 49 should be read concurrently. What in 49 they are telling is that cost to the previous owner should be the cost for the assessee. The assessee who received it on gift basis, the cost for him is the cost for the previous owner. Now we need to know the status of the forfeited money retained by Mr. Rakesh, whether that amount of 25,000 which we are expected to deduct from the cost, should that be applied here? Answer to that question is in the negative. Please understand, the gifted property which has got some amount of attachment in the form of forfeited money will not come to the hands of the new owner. It is all like the story of Saint Valmiki. What was that? He was robbing many people, and one point of time when he was about to ask Saint Narada, please give all your valuables. He just said, I will give whatever you want, but what for you are doing, you please let me know. I want to do it for my family members only, for their welfare. Don't you feel that it is a sin doing this robbery? He said, yes, I know, but I don't know anything else, so therefore I am just doing. So, you are giving the property to them along with the sin. Go and ask your family members as whether they are prepared to take up sin also along with the property. He went and just checked up and found that none of the members wanted the SIM, but only the asset. Let me tell you, the same story is repeated here. What is that? Upon a gift, the mistake committed by the previous owner and the retention will not affect the new owner who took it on gift basis. Therefore, that forfeiture of money will not affect in the hands of Mr. A. This is the first point that you need to know. Then, this was gifted by 15th of June. So, please just understand that what is the cost for the previous owner? Cost for the previous owner being 1,05,000. But, always remember, you have the fair market value indication given in the problem at 1,481. That is the time at which we do have this cost of inflation index kept at 100. So, had it been Mr. Rakesh, how much would have been the cost he would have taken up? Fair market value only he would have taken up. So, 1,50,000 will be considered as cost. So, now, I am just communicating to you about the forfeiture, and in the process I am just referring about the cost. But this is not the order that I normally follow. What is that order that we follow? Whether it is long-term capital asset. Yes, it is a long-term capital asset. Transfer took place finally only by 2nd of January 2013. Gift was taken on 15th of June 1986. Therefore, it is long-term capital asset. Now, what is the sale value that we need to consider? Look into that sale value. Consideration is rupees 12 lakhs. So, firstly, it is long-term capital asset. Secondly, the sale consideration is 12 lakhs. You don't have that stamp duty authority problems, and therefore 12 lakhs will be taken up. Now, the very important portion in this problem is the cost ascertainment. What is that cost ascertainment that we are going to take up? Originally, he bought it at 1,05,000 in the year 79, and he carried out renovation to the extent of 10,000. Both put together comes to 1,15,000, whereas the fair market value is 1,50,000, which had happened after 79-80. So therefore, had it been Rakesh continuing with the property, what value he would have taken up for the cost? So cost or fair market value, whichever is beneficial to him or whichever is higher, you can take it up. So 1,50,000 rupees he would have taken up. Therefore, that will become the cost in the hands of Mr. A. That forfeiture, whatever he was just had, will be ignored. Only when the property is continued by Rakesh, we are expected to deduct the amount of rupees 25,000. In this case, that forfeiture money, that is, the money that he had retained, will not be affecting Mr. A, but the cost alone will be taken up at 1,50,000. Are you clear? Are you clear, all of you? Now, one more important thing that we should understand is that, what is the index that we should take into consideration? 1,4,1981 value we have taken up as 1,50,000, but the gift was made to him in the year 86-87. Whether we should take up the index as on 1,481 or for the year 86-87. What is the index that we are going to take up? The answer to that question is that we should consider the index as on the date of gift, as on the date of transfer to him, not the index as on the date of fair market value. Are you understanding, all of you? So, there is a case law, Manjula Shah versus CIT, wherein in Bombay High Court, for a similar case, what they have indicated is that not only the previous owner's cost we should take into consideration, so previous owner's index also should be taken up for indexed cost of acquisition. So, always remember, my dear friends, that whenever you write under examination condition for similar provision, you consider the index applicable to the year in which gift was made. Do not forget to write Manjula Shah versus CIT, Bombay High Court. Here, the jurisdictional application they have not given in this problem. So, if this assessee were to be living other than the state of Maharashtra, the High Court decision of Bombay High Court will not be applicable for people in Karnataka or any non-Maharashtra state. So, however, when we are writing under examination condition, we have to give various possibilities. Are you clear? Are you clear? Do you have any doubt on that? So now, let us just take up further into that. This 10,000 will not be taken up at all. So, had Rakesh continued, it would have been 1,05,000 plus 10,000, 1,15,000, which is much lesser than the figure of 1,50,000. Therefore, the renovation made by him is to be simply ignored. Then, after that, 83, 84, once again Rakesh had spent 50,000 rupees. Yes, this matter is to be considered. So, cost to the previous owner would mean not only the original cost of construction, subsequent renovation, whatever he made, that will also be captured. But this 50,000 rupees for which the index should be taken up, that being the index prevailing for 86, 87 only. Are you understanding, all of you? Because amount was spent by the previous owner. Then comes Mr. A, who had spent in the year 93, 94, 1,90,000. So there is no dispute regarding this particular amount of 1,90,000. Then Mr. A entered into an agreement with Mr. C for sale of house on 1st of June 95 and received an advance of rupees 80,000. Like how Rakesh did, he is also doing. The said amount was forfeited by Mr. A since C could not fulfill the terms of the agreement. Now, this amount of rupees 80,000 should be adjusted. I will just sequence it this way. Rakesh was the original owner. He gifted it to Mr. A and finally it was sold to one Mr. Sanjay. Rakesh also received 25,000 rupees and A also received rupees 80,000. Are you understanding? So now, the question is that how this indexed cost of acquisition will be applied. Are you understanding what I am just taking up? So, cost to this gentleman will be 1,481, fair market value of 1,50,000. He will take it up. Cost to the previous owner. Then, subsequently, in 83, 84, he had spent 50,000. So, 83, 84, how much? 50,000 he had spent. Then, he also spent 1,90,000 in which year? 93, 94. How much? 1,90,000. Are you understanding? So, what is the corresponding index that we should take into consideration? Index for 81, 82 should not be taken. This is what I was just telling you. Only in the case of Manjula J. Shah versus CAT, where they say not only the cost but also the same index should be taken up for the computation. In all other cases, our institute study material is working out based on the index prevailing on the date of gift. That is very, very important. So, what is the index as on the date of gift? So, in which year it got transferred? All of you? 86, 87. 140. 140. Why 140? Gift was made in the year 86, 87. Are you understanding? Are you understanding the case? So, what is the index for 93, 94? 244. Now, where is this forfeiture will be adjusted? Forfeiture is to be adjusted against cost. Are you understanding what is cost? So, where would this 80,000 will be adjusted? See, we are not really worried about the 25,000 rupees forfeiture by Mr. Rakesh, because Mr. A did not receive this amount. So, therefore, that particular amount of forfeiture will not affect Mr. A. But this 80,000 should be adjusted. Where this 80,000 should be adjusted? So, all of you please remember, forfeiture of an earlier sale transaction, it should be deducted from cost. See, the logic is very simple. Sale minus cost is equal to capital gains. This is what I was just telling. when you made an attempt to effect a sale on an earlier occasion and received some amount of money and not refunded, that amount is an income only. So, instead of taking it up as income, they are expecting you to reduce it from cost. So, both will give you the same effect. Are you understanding? Instead of offering it as an income, they are expecting you to deduct from cost. Now, when you have 3 layers of cost, we need to know as against which cost this amount should be adjusted. Should that be adjusted before indexing or after indexing? Or for feature itself, should we have to apply any index? Are you understanding my query? So, understanding the problem itself is 50% success. Then the other 50% would be invoking the provision and then knocking it off. Come on, tell. Are you clear? So, let me just tell you a very, very sad part for the assessee. What income tax department is saying, or through their section, what they are telling is that the amount forfeited should be deducted from cost before indexation. If the amount what you have forfeited will have to be greater than cost, then cost will be taken up as nil before indexation. Therefore, it is a greater amount of sin when you are retaining somebody's money without discharging any duty. So, people might just say, sir, it is as per contract, but department is taking a different view. We need to secure marks under examination conditions. So, whether it is justified in the natural law and all that, let us just discuss separately. After qualification, we will sit separately, debate and conclude that it is inconclusive. So, let us not just do that under examination conditions or at the present level. So, what you have got to do, I am telling you. So, this amount of 80,000 should be deducted from cost. Now, there will be a debate once again. Whether it should be adjusted against 1,50,000 or 50,000 or 1,90,000. So, generally, in a case like this, people just normally take up the earliest cost. What do you mean by earliest cost? On 1,50,000 rupees, we will adjust 80,000 rupees before indexation. It is very cruel, but what to do? That is the way, if you do, you are given with marks. So, I am just telling you what you have got to do. Are you clear? So, now indexed cost we will work out. Gifted. How much is that? 1,50,000. Fair market value. Greater than 1,05,000 plus 10,000. Financial year 86, 87. Index of the year in which the capital asset is gifted. How much is that? 86, 87 index, 140. Are you understanding? Please be careful. You should not be tracing back onto the previous owner's index. That is possible only in Maharashtra. Say, if I have any dispute, then I would tell to the assessing officer saying that, sir, in Bombay High Court, would mean they will listen. In Bangalore or in any other place, if I say Bombay High Court, then they will see it is not Maharashtra. So, our institute is always providing the alternative solution. That alternative solution cannot hold good unless the case is posted in or under the jurisdiction of Maharashtra. So, now let us just take up the next one. Then, addition. How much is the addition? 50,000 is the addition. The same 86, 87 only. Because addition was made before it was gifted. So therefore, 140 only we have to take up. Correct? This is addition by Rakesh. Next, addition by A. How much is that? 1,90,000, 93, 94. The corresponding index for 93, 94. 244. Now, what is that we are expected to do? 1,50,000 minus 80,000. This is what I was just referring about. Into 852 divided by 140. Correct? So here I would like to show that computation. 1,50,000 minus 80,000 into 852 divided by 140. 4,26,000. 50,000 into 852 divided by 140 into 852 divided by 140. 304 286. Here it is 1,90,000 into 852 divided by 244. Is that clear? So, for feature of Rakesh will not affect the valuation of valuation for A. Correct? For feature of A will be adjusted against cost before indexation, that too at the earliest cost. No indexation benefit is available for feature. So why we are adopting financial year 86-87 even though addition was made in the year 86-87. So addition made by 83-84 but indexed as on or indexed as in the year of gift. Is that right? Are you understanding the logic? You take up the cost, but indexation will be taken up only in the year in which gift was made. Are you understanding it or not? I didn't understand. No, it is not a question of understanding. The provision is like that. The provision is like that. So what section 48, I will just show you as what they have just communicated on that. So I am just revealing the section that you have. For feature of Rakesh will not affect the valuation of A. I will just show you. So let me just complete this exercise. Then I will take up all your questions. Shall I proceed? Now, computation of long-term capital gain. Consideration received. How much is that? 12 lakhs less indexed cost of acquisition acquisition, etc. Are you clear? So section 48 is communicating something very interesting. Can you read out? Say, I think you can skip that particular paragraph. So you just go to the next one, provided further. Are you understanding? So whatever they have just referred as cost of acquisition and cost of improvement, now you have got to make it out as indexed cost of acquisition and indexed cost of improvement. So you just skip this particular thing. Now you take up this particular paragraph. Come on. Are you understanding? The market value on the date of transfer shall be deemed to be the full value. Okay. So indexed cost of acquisition means, what is that they are mentioning? Bears to the acquisition, the proportion cost of inflation index, asset is transferred, bears to the cost of inflation of the first year in which asset is held by the assessee for the year on 1st of April 1981, whichever is later. So therefore, when Mr. A received this asset for the first time, the index prevailed on that particular date is 140. So we cannot go back to the index of the previous owner, Mr. Rakesh. Are you understanding? Please look into that. Item number 3. Indexed cost of acquisition means an amount which bears to the cost of acquisition the same proportion as cost of inflation for the year in which the asset is transferred. In that particular year only the asset got transferred. Only for cost purposes you are taking up cost of the previous owner. Are you understanding what I am telling? So cost only you need to borrow from the previous owner, but index and all that you should take it up from the year in which you become the owner or in whose possession the asset was taken up. Are you understanding what I am telling? So cost alone you can borrow, index should be taken up only in the year in which that got transferred to you. Are you understanding? So regarding forfeiture and all that, we have it in the cost computation, that we will take it up later. There are other problems that we will be taking it up. So now let us just see as whether we can see through other items. So I think we will just finish up today at this stage, and we will just consider our class for a next session. Thank you.